Why mindful trading matters. Welcome to Conscious Crypto. Have you ever been in a trade and then doubted why you were in it in the first place? Then struggled to determine whether to close or see what happens, like maybe it will go in my favor. So 50-50 is your best probability setup? Why do you hear about journaling from successful traders? Tracking trades is important, but moreover, it gauges the why of your trades. We must record thoughts to overcome impulse, to remind ourselves that there is a higher probability setup in play. Mark Douglas attributes one attribute to successful traders. One, they think different. They escape the monkey mind that can search for 1,000,001 reasons to hold a loser or scratch a winner. Journaling allows us to honor our strategy, to hold what we know is tested and true, not guaranteed, but likely. Whether we act on impulses when trading separates gamblers from true traders. So Mike Bellafore, who runs SMB Capital, a trading firm, essentially has his traders at the end of every day fill out a report card. And this is how traders get better. He swears by it. This is how traders get better, because it's one thing to have a winning trade, see the setup and execute. But when we're journaling, we have the opportunity to essentially take that trade multiple times over. It's fantastic. Think about it. You take one trade, it's a winner, successful, but if you go back and now you have screenshots of it and you journal why you got in that trade, you're reinforcing your setups so that the next time it appears, you have no problem taking the trade and putting on more size. So here are some things that I journal. So it used to look like this daily report card, all these different trading errors, and I even tied the emotion that was related to these trading errors, what I did off the charts, what I did on the charts, evaluation. And honestly, yeah, we have enough time as day traders to do this. But honestly, I didn't find any of it that effective except for a few key things I'll go over now, which is why I built a new spreadsheet, and it's called Why. And it's simply every day has me going through, okay, my pre-trading routine. My pre-trading routine, right? Am I in a primed state? That means, did I meditate? Did I move? Did I breathe? Those things get me in a prime state for trading. Then I check my calendar so I know what my day holds, so I know if I can hold a trade or if I should take a trade or not. Because if I'm taking a trade and then I gotta just bust out the door, it's not ideal. And then of course for me, I got caught up in news a few times, so I have it as part of my pre-trading routine. I need to know what the news is that day, and I usually know big events like the Fed meetings well in advance, but this habit helps me be in trading or not be in trading, because if there's a big news event coming, maybe the markets are about to go soft and they're about to quiet down. So what's the point of trying to take that setup if I know the real volatility is coming the following day or later that week? I also have a watch list. Now, this watch list is comprehensive. It has, the crypto I'm watching, the Forex I'm watching, and the indices I'm watching. Another aspect is my risk. And because of some unfortunate things with Bybit requiring KYC, thank you, Gary Gensler, I now keep a smaller amount on a decentralized derivatives exchange. And so now I can trade with less, which is the whole point of it anyways. That is leverage. The whole idea of leverage is to be able to trade with more money than you have, thus maximizing your gains. But also in my approach with crypto exchanges and what we saw here in 2022 and 2023, like, I don't want to keep all my money on these exchanges. So using leverage to trade with the normal lot sizes that I would is kind of why. So I have my balance here, which is actually, and I have like the percentages of risk. Now, again, like I'm unlike other traders. So most traders maybe take a half a percentage of their risk. I used to take like 10, 25% of my account and risk it because I was so confident in my setups. I begin to tailor that back because I realized some of those trades would spiral me out if they were losers. When they were winners, great. And most of the time they were winners when I look back at my P&L. But I realized my emotional capital is more valuable to me than my financial capital in that situation. So the most I go to is 5, and that's on my A++ setups. The setups I see once, maybe twice a month. And I'm like, okay, I'll layer into this trade, or, I will, place a heftier entry. Now here is basically what I'm looking at. I want to every day understand what asset I'm looking at and what the trend is, right? So if I'm going to fight the trend, I need my reversal signals. I need to know exactly why I'm going to place a fade trade, a counter trade, a counter trend trade. And also if I'm in a trend, I'm really good. Like that's where my bread and butter is finding the reversals, right? Seeing changes in the markets and knowing when to strike. So a big part of me is like, all right, I'm learned to make the trend my friend and not fight the trend, but also to see that the reversal signs are imminent, and maybe it's time to stop playing with the trend and instead be waiting for that exact signal that the trend has shifted. And that's different for different people, right? It might be a crossing of moving averages. For me, it's something I call FTD. Sometimes it's 3 hits, double tops for some people. We're all kind of looking at the same stuff. We know the same stuff, but it's probably not in your strategy, or what's in my strategy is not in your strategy. So be it. Here's a huge section that I really didn't understand till recently. Like, invalidations are so important to me now, because I'd often scratch a trade too early. Like, I'm sick of this drawdown. Like, it's not hitting my stop, but at the same time, I'm not seeing it make money, and it's like, do I scratch this trade? Do I take the little bit of profit it just gave me, or do I wait? So an invalidation to me is so important because it tells me whether the trade is in my favor or not. And until it invalidates, the trade is still in my favor because there's no proof otherwise. There's no proof otherwise. Here again, risk, and then longer short, and those automatically fill. So, put L in there. Oh, it'll turn green for buy. And if I haven't taken it, I don't fill in those. Then of course, what is the news, the time, and what is expected, and the details of it. This is probably the most important section, and I just have these as check boxes. And this is moreover of like when I'm looking at charts, I'm like, oh, I'm usually not taking a trade until I've already had 2 of these checked off. And then I'm just waiting, and I'm waiting. And as soon as I get the 3rd signal, then I'm in the trade. But I do have an entry over here as well where like I just remind myself, I'm like, hey, did you honor your entry? Did you place a limit order at the peak? Did you get a good fill of like a 50% of the recovery of the candle? Like, did you get good entries? And then over here, my golden rule is I'm allowed 3 swipes of 1% of my account. And that depends on the volatility of the asset and other things, but essentially it's a pretty much a golden rule, hence it being in gold. I also have some things that tell me like, is the direction true? And then down here, I have some simple rules for my stop loss. Like, is it above local low or is it above a local high? And I honestly put this rule as generous because, again, my risk management situation is such that I'm willing to lose 1% of my account, especially if you factor in the idea of asymmetrical compounding. Like, asymmetrical compounding is essentially that if you have one winning trade and it was you risked 1% to get 3%, so a 3R multiple, then essentially the next time you risk 4% because that's the original 1% and your gains from the last trade. And that way, if you lose that trade, you really only lost 1%. But if you make that and you still get your 3R multiple, you just added 12% to your P&L. And that is a monster way to grow small accounts, which is what I had to do. I didn't have a lot of money to trade with, but I've made it 2 years on trading income alone. Now, stop loss, exit. So then exits are important to me too, because my greatest fear is leaving money on the table. And so I really want to know that like I've checked the boxes on my exits, and I'm starting to implement a partial take profit scenario where, all right, if you're not exactly sure, 50%, man. 50%, move your stop somewhere comfortable, obviously break even, maybe even above or below the local high, local low, right? Like managing that trade. So you're still going to make money, and you have to think of it that way. You're still risking your unrealized profit or a portion of it for potentially more profits. So you have to realize that you're constantly managing risk, and that is how success is found. Then down here, I got my my exit reason and result. That one is huge to me. This one is monster. As I just said. Then trade management, like my feelings in the trade, waiting for the candle close instead of being like, oh, well, it's a volatile candle, it's going against me. I wait for the close and I'm like, what does that candle tell me? And if it's inconclusive, I wait for the next candle to tell me. And I found that this patience is the most valuable skill I'm developing. And like relaxing my chest. Where is it? Is it in my chest? Where is it in my body? And this helps me pull out of the charts and pull out of this tunnel vision of like, oh my God, this is what this chart is doing. It's going, all this analysis and hyper focus that is so misleading, because we know that the markets change second to second, minute to minute. And so if we can just relax for a minute, relax for 5 minutes, 10 minutes, perhaps that trade has more potential, right? Trading screenshots. If I really like something, I put it down here before I go over and put it in my back testing, where essentially that's a new one. This is all new. This is where I used to do my back testing with a lot of calculations. Like, what was the hit rate of this trade? How much did I lose when I lost? A lot of back testing up in here. So, how many opportunities did I see per month? And again, these are my A+ setups, and I'd even rate them. If it was a C, it's like, okay, why? I was super diligent. But again, what I really found was the most valuable section was all of these screenshots. All of these screenshots was so valuable to me, and I could mark up the charts and essentially take a screenshot of it and have most of these notes in there. So I went back to this, I call them shot plays. Don't ask me why. And it's not all filled out yet, but I want to know how much the move typically, how much of the move I could capture based on how large the move actually is, and how long the move is. And for me, that's in days. Here it's calculated in hours, just so I can remind myself of patience. On this other one, I even built a patience meter. And this patience meter was like hours in the move versus the hours in the trade, when I got my actual signal to enter the trade and my likely signal to exit. And this is using the replay function on TradingView and replaying and being like, okay, where would I logically have gotten in this trade? And then where would I have logically gotten out of this trade? So the difference here was also my patience meter, meaning like, or you could have held this trade for, 53 hours or 115 hours more, 5 days more. So there's an aspect of like, usually I can always hold the trade longer. And that helps me when I approach my greatest fear, which is the fear of leaving money on the table. Why? Because essentially leaving money on the table is like the biggest fuck you from the market to me, right? It's the most offensive thing, because it's like the market gave me exactly what I wanted, and then I just crush my spirit thinking, the market gave you what you wanted, yet you couldn't sit there and let it make you money. The most important section right here, most important section. So these are things I journal, right? Am I rested enough to hold this trade? Do I have the mental capital, the physical capital, and financial capital to see this trade through? Because a voice that speaks from one of the 4 fears of trading will talk me out of a payday. Fear of leaving money on the table, fear of missing out, fear of losing money, fear of being wrong. These fears are the only human errors that I can make. They lead to all of these other human errors. They lead to all of these, like, my entry was too soon, my entry was too late, my exit was too early, my exit was too late, my position size too small, position size too large, held the trade against me, traded a shitcoin, moved my stop loss against me, traded into news, influenced to take a trade, I didn't take profit on my strategy, over trading, I missed a trade entry, like hesitation, and ultimately what it comes down to is these 4 fears of trading, because we can't have certainty of what the market will do, but instead what the probabilities of our past performance will likely yield. Past performance is back testing, forward testing, and actual successful trading that you journaled and you cataloged and you can reflect back on and remind yourself, like, hey, I've got this. I've got something figured out. So I got to do more of the good stuff, less of the bad stuff. And ultimately, it's really do less and do it bigger and do it better. This is Conscious Crypto. My name is Bass. Thanks for dropping in, my friends. To the loop.